Hey, this is Alina Araujo with Windermere Real Estate. Thanks for watching this amazing video. Today I'm talking to Laura Rench from KeyBank, and we're actually talking about something super specific. Laura Rench from KeyBank, her and I have worked together for many years, and she focuses on something that's called a physician loan. Laura, thank you so much for being with us.
Thank
I
you for
appreciate it.
having me.
I've known you for many years, and we finally sit down and do something like
Something
this.
official.
Yes. Tell us about yourself, and I want to hear, and everybody, of course, wants to hear, like, what is a physician loan, and then we'll get into all the
Some details.
details. Yes.
Okay. Hi, I'm Laura. I've been in finance for 38 years now. That sounds really
You look like a
frightening.
baby.
Thank
Would never
you.
know
I feel
that.
like one too. I've been doing mortgages for about 30 years, almost to the day. And I've worked with the physician loan since it became a loan in the late 1990s. Ever since then, it's been my little niche and the product I focus on and the clients that I like to work with. And so the doctor loan, the physician loan at KeyBank, it's actually called the Doctor Dentist Program. It's a mortgage loan, so a home loan. It's not for businesses, it's for buying your home. And it's for doctors and dentists. Some programs will allow veterinarians or even other medical professionals. So it's just a way. You want me to give you some details?
I
or-
want to hear all the details.
Okay, so it's a way, for physicians to buy a home with less down payment to make it a little more competitive for them. Because typically when people graduate college, they go out, get a job, and start saving money for their new home. And with doctors, they don't get to do that. They get to go to more school, and sometimes even more school. So they might be in school for 10, 15 years after that. And so earning minimum wage. So they don't have a down payment. So when they're trying to shop for a home, they're not as competitive. And that's not really fair to folks who are in an industry that is going to be around. They're not going to lose their jobs. AI cannot slice into a person.
Exactly.
So they're always going to be needed. So they're always going to be there. So the doctor loan makes it available to them to be able to make an offer on a house, a competitive offer,
Okay.
and win, hopefully.
Yes, and when. So when a physician contacts either myself or you, and hey, they just got out of fellowship, what is their first step with a mortgage approval?
So first step, talk to your loan officer first so you can find out the details. Doctor loans are really unique and they're very special. They're actually, from a client standpoint, much easier than a traditional loan.
Okay, how
There's a little bit less paperwork involved.
Okay.
Some verifications aren't quite required because it's typically a portfolio loan, meaning the bank keeps it on our books. We don't sell it to an investor.
Yeah.
So we kind of make the rules within guidelines.
Okay.
Some things that I will discuss with them are, do they have a down payment? Maybe they need one, maybe they don't. Some doctor loans, for the most part, require anywhere from about 0 to 10% down.
Okay.
Some will require more than that, but
Depending on the amount,
depending on the amount. But there's no PMI, private mortgage insurance. For people who don't know, private mortgage insurance is the insurance premium you pay as part of your payment in case you don't have 20% down traditionally. So this loan allows you to avoid that. And that's kind of, in my opinion, probably the number one benefit if you're putting less down. So that's a discussion we'll have, is down payment. We'll discuss if they just graduated fellowship. So this is a unique loan in this respect because we do not do the traditional 2-year history on this product. When a regular person goes and applies for a mortgage, we need a 2-year history of employment to show that they're likely to pay, right? We're giving people hundreds of thousands of dollars, sometimes millions of dollars, crossing our fingers, hoping they pay it back. And so we look at risk factors, right? And one of those is, have you had a job for the last 2 years? For physicians, we actually count med school, recidency, fellowship.
They do work there,
which
so.
they do. But the big advantage is we don't have to average that income. We will take their letter, their offer letter, or their contract from their new job and use that as their income completely. We don't average it. We just take that number.
Okay.
So they're probably going from earning $70,000 a year to maybe 200 or more. We'll use that new number. We don't average it. So that makes them qualify for a little bit more.
Okay.
Yeah.
Do student loans hurt the pre-approval process for a physician loan?
Whoops. I love that question. They don't hurt it. Student loans actually help
wow.
physicians qualify in that they've given them a credit history. Many times I talk to people who are looking for their first home and they maybe have a credit card, but they have no credit history at all, maybe. And so student loans give you an automatic credit history. Student loans are calculated into the ratios under some circumstances, and they are excluded under some.
Okay.
And those circumstances vary a little bit by lender, but mostly I'm familiar with almost all of the programs out there. I'm sure there are some I don't know, but most of the time, if the student loan payment is going to be deferred for at least 12 months after your closing date on your new home, then it's not included in your ratios. So instead of having an
Wow.
extra $2,000 of debt, maybe you have zero,
Okay.
which makes
Because
you
they are counting on you making quite a bit more money when you actually
right.
start
And you'll
that
be,
job.
once you start your job, and you'll be able to afford these payments, where when you're in school, usually they're deferred, and you can't make a $2,000 a month payment when you're only earning $70,000
I know.
a year.
I know.
You probably could, but then you can't eat, which
Yeah.
probably people like to do that. Yes.
That is incredible how very little they make during residency and
It
fellowship.
is. It is. And I'm assuming it's because they're getting schooling, right? They're
sure.
learning their job. They're on the job. In my experience and opinion, they work harder than just about anybody.
Yeah.
Any doctors work really hard. Don't get me wrong. Oh my gosh, they work so hard. But boy, those not the med students so much, but the residents and the fellows, oh my goodness. I'll talk to people. Yeah, I just got off a 48-hour shift. I'm exhausted after 8 hours. So good for them, because I guess it's for the young people.
Yes.
Yeah.
Most
Okay.
of the time they are younger.
Yeah, mostly.
Yeah. Any red flags that you can tell a potential home buyer who is trying to get a physician loan?
Just things that stand out to me. First off, if they're a doctor or a dentist. If they're self-employed, this program is a really good program, just because the way we calculate the income is a little bit different. It's in their favor, so it's
Okay.
really helpful. One of the things that I look for is people who are maybe buying their second home. Or they've already owned a home and probably didn't know about the doctor loan, so they probably didn't
Had
get
that
one.
situation before.
Yep. And so now maybe they own their home and they're wanting to buy a new home, but they don't want to sell the old home until they buy their new one. Maybe they have kids, they don't want to disrupt them. Maybe it's spring and they want to wait until summer to move, but they want to buy a bigger home. Their family is growing, or maybe they move to a new location, a new work, something. So this program, because of the ratios are so high, it allows them to buy their other home, their second home, before they have sold their first one. And then they can turn around and sell it afterwards if they want, or
Using a physician loan.
using the physician loan.
Okay.
Yes.
How many physician loans can you have at a time?
It depends. Mostly the answer is 2.
Okay.
But it has to make sense. So you can't go from, you'd have to explain it. You can't really have your home and then buy a rental property. The physician loan is meant for a primary residence, the home that you are going to live in. But
secondary residence too?
Depending on what that means. So second home where you're going to visit, like in Palm Springs or the Hood
Something like
River or
that?
somewhere. No. But if it's your second home, like I said before, in that you already own one and you're buying another one, it's still a primary residence.
I see.
Then you can get one.
So
can get a
you
second
don't
home.
make people refinance out of that first.
Not necessarily.
Okay.
If it's a weird scenario, we
Yeah.
would, but no.
Okay.
No, not usually.
Are there like prepayment penalties on that?
No. Excellent question.
Prepayment penalties when you are trying to pay off a loan before there's a certain
Yeah,
time
it's typically
frame.
3 years.
3 years, yeah.
Yeah.
Okay.
And it's usually a percentage of the loan amount, like 2%, which
the first year, 2%.
yeah,
second,
and
and-
sometimes it decreases, sometimes it doesn't. It just depends on the program. Work for KeyBank, we don't have any programs that have a prepayment penalty. Most loans these days
No, yeah,
don't.
that was back
but
in, like,
well, it's still good to ask, because there are quite a few in the last couple of years that I've run up against. I haven't worked for a company that did them, but I have seen people that have, and getting the doctor loan can help you with that. So you can still keep that loan for another year, keep that home for another year, and maybe rent it out so you don't have to pay that penalty, but you can still buy your new home with a doctor loan.
okay.
Yes,
Amazing.
absolutely. Yes, very amazing.
When do you turn down a loan? Do they have to have perfect credit score? What are the
Not perfect, but
requirements?
average to above average. Our minimum credit score is 700. I know a lot of lenders go 720. I don't know of any doctor loans that are below that. So we do need clients who have better credit. The reserves are money that you have that is not part of the transaction. So you're going to keep it like money in your 401k, for example, or retirement, or even stock. money that you have that's not going to be part of the transaction that you typically need about 6 months worth. Some programs, if you're doing a loan over $1 million, you'll need 12 or even 24 months.
So if it's a student, how would they have that kind of
So
reserves?
that's excellent. They typically don't. So I'm actually working with one right now who is just going, a couple that is just going into residency. That money can be gifted. So
Okay.
from, and not every loan, but in our
Mhm.
loan, in most loans,
Okay.
that money can be gifted from a family member.
Yes,
You know,
gifts are welcome.
yes, if they have the ability to do. Doesn't have to be parents, it can be
Mhm.
grandparents or sibling
Mhm.
or daughter or son if
Mhm.
they're someone
Okay.
who's a little older.
Okay.
But that could be gifted. Or sometimes these kids do have money and they just can't or don't want to use it. The reserves isn't money we're taking. It
Sure.
stays as
They
is.
want you to know that,
Yeah.
or you want to know that
That
the
they can
person
get
that
money
can
if they need to.
yeah.
The purpose of reserves is if you hit a hardship, what if I actually had this happen about 20 years ago with a client, maybe 15. He was a physician and he actually was hit by a bus on his bike. He was on his bike and the bus swerved to, I don't remember the details exactly, but swerved to not hit a person crossing the street and hit him instead. And he injured his hand and he couldn't do surgery for 2 or 3 months. We want to make sure anyone, not just a
Sure,
physician, but anyone in
absolutely.
that position can pay their loan. KeyBank's theory, which I love, is if they can get it as a gift, they'll probably be able to get it again if they need to. Some
True.
lenders don't allow gifts for
Mhm.
reserves, but we do. That's
Okay.
our philosophy. A very common sense,
Sure, sure. Yeah.
if you'll say. But
Okay.
yes, that's an excellent question.
I love it.
Mhm.
Okay. Is there any information that we did not talk about specifically in the physician program that you find it useful to mention?
Yeah, it's a question I get a lot, especially for people who have already owned a home, maybe a condo or a townhome, and they're ready to buy I hear people say my grown up home a lot. They're ready to buy their next home. Is we do have high ratios for this program, usually. At KeyBank, we do. We go up to 50% debt to income ratio. That's how much income you have coming in versus the debt you have going out. So that will give you room to potentially
Mhm.
have two.
Okay.
So that's a very helpful thing that people don't know. Rates is always a hot topic. Obviously, everybody is, especially in this world we live in right now, very concerned about rates. They're much lower than they were 2 years ago,
That's
literally
true.
like 2%
Yeah.
lower than they were years
Yeah.
ago. But our rates at KeyBank are lower on the doctor loan than they are in our traditional loans.
Okay.
So even if I have a client that comes to me and they're a physician or a dentist and they have 20% down, they are still better off doing the doctor loan. And one of the other things I love about KeyBank, the KeyBank doctor loan, which I helped redesign, by the way, 8 years ago when I first came to KeyBank, we allow all products like 15-year, 10, I think we have a 10, 15, 20, 25, 30-year fixed, the arms, 5, 7, and 10-year arms.
Okay.
A lot of lenders will only offer one or only offer arms
So
or
you guys have a
something.
lot of options.
We do. A lot of options at lower rates, which make it more affordable, right?
Sure.
You can make your buying power greater.
Okay.
So those are things to know.
And what states do you cover?
There are about 30, no, wait, that's not right. 43 states that I can lend in,
Okay.
just not in the middle. So it's the states on the East Coast, on the West Coast. And mostly that's because that's where KeyBank has a footprint in.
Sure.
Some lenders can do doctor loans in all 50 states.
Mhm.
I haven't really had that need to. I've got a couple in Texas, in
Mhm.
California, here in Washington.
Okay.
But I because I've worked with this program for so long and I've worked with the University of Washington residency program, a lot of times I'll meet folks when they're in residency or fellowship or they're just graduating and then moving elsewhere.
Yeah.
So that's where I get to meet them. Or when they're coming here, like when they just get accepted into residency or fellowship
Mhm.
or even their new job,
Yeah.
they get told about the doctor loan, go talk to Laura Rench. She knows everything about doctor loans. And I get to meet them. So sometimes they're coming from another state, which is always really fun. It's
That
fun to
is
help
fun.
people relocate.
Oh.
The history of the loan, it was created, people say to me, why do doctors get a special loan? Is it because they make so much money? And we live in the Northwest. Compared to what some people make, doctors don't make that much money. That's not it. It was created because they're in school for so long. And back then, back in the 90s, you needed 20% down. There was FHA, that was it, which was back then was only 3% down. And the mortgage insurance was pretty high. So we created the program to help make it more competitive for these folks who are wage earner, who are working really hard, and to have homes. Some of the hospitals have rules, especially for the younger folks. They have to live within 20 minutes is
Yes, sure, yeah.
typical.
Heard that. Yes.
Younger folks meaning like the residents, the fellows, or even sometimes the new attending physicians. They have to live close. In Seattle, that's really difficult, especially on a
Traffic.
yeah. You can't get a block away sometimes in 20 minutes with
Yes.
traffic. So a lot of times folks are looking for homes that are on the bus line or even light rail, although that's kind of farther away. But they're looking for homes that are easy access that they can get to. Most people are, but not always.
Yeah.
But the physicians, the other thing about physicians is they don't have a lot of time. I hear a lot of, I had to do so much on my last loan. I had such a difficult time on my last loan. And I think because I've grown up in my career working with physicians, I get it. You need to talk to me at 10 o'clock at night. Okay. I mean, I'm fine. In fact, I had a conversation the other day at 9:30 p.m. on Saturday.
Yeah.
If that's what you need, that's what you
Availability.
need.
Absolutely. Yeah.
Not every loan officer and not every loan officer that does doctor loans will do that. That's just, I've always done that. And that's just, my family's used to it.
I'm sure they appreciate it. Yeah.
I hope. I have had a conversation about, I don't know, a few months ago with a client at 3:30 in the morning on a Saturday night. I couldn't sleep and I was wide awake and my dog was really irritated with me. So I went into my office and started working and I emailed the client. He emailed me back. We went back and forth and finally he said, "Can we just talk about this?" I'm like, "Yes, it's 3:30 in the morning. That's not normal."
Yeah.
But that does happen. But physicians are very busy. So if I can be the loan officer that says to them, "Here, I'm going to take as much as I can off your plate. There are thousands of things that you might need to do. Here are the 8 things I really need you to do. And here's the order I need you to do them in. And I will remind you, this is what I need now. This is what I'm going to need later."
Perfect.
And then I do, because they're so busy, and not to be overly dramatic, but they are literally saving people's lives. I'm dealing with money, which is important, but it's not as important as someone's life. Let them focus on what they are a specialist in, and I will focus on what I'm a specialist in.
Yeah.
And they respect me and I respect them. And it's a very wonderful mutual relationship. And because you work with a lot of them,
Yes.
that
Yeah.
it works for all of us if we can all be that way. And it's
Absolutely.
really important.
Yeah.
Yeah.
Thank you so much.
You're
You've been
welcome.
amazing.
Thanks for having
Everyone,
me.
Laura Rench with KeyBank. She is a specialist in physician dentist loans. My name is Alina Araujo with Windermere Real Estate. I help physicians relocate to the Seattle area. So subscribe to my YouTube channel for more information like this. And thank you so much for watching. And we'll see you on the next one.
Thank you.